impact of Japan's bold policy moves, how do you rank developed versus emerging markets?
The way I'd rank the globe is I'd have the US equity market at number 1, Japan at number 2, Europe at number 3, and emerging markets at number 4. The US equity market is fascinating. Do you know the best performing sectors in the first quarter were healthcare, consumer staples, and then utilities? We've got a bull market led by defensives, which sounds very counterintuitive, but what you need to look at there is M&A activity in the United States is up 64% year to date. Share buybacks are up 32%. What is going on there is that we're getting leveraged buyouts in consumer staples. Why in consumer staples? Because that's where you find steady cash flow. There is a positive earnings yield differential between the earnings yield of the consumer staples and the 3% borrowing cost that investment grade companies have today. So M&A share buybacks lead the bull market in the United States. It's about buying relatively inexpensive, stable earnings streams rather than buying cyclicals. I talked already about the macro situation improving in Japan. In Europe, we did see an important improvement in funding conditions in Europe. And despite some of these issues in Cyprus, we do still believe that Europe will grow this year. Unfortunately, large cap EM looks troubled. Korea and Taiwan are the wrong side of the weakening yen in terms of competitiveness. Investors are confused about China's economic outlook. The central bank governor there has been talking about being preemptive in dealing with inflation. We've had a reimposition of property price control measures. We already had a big stimulus in China in the second half of last year, and unfortunately it doesn't seem to have generated the economic momentum that people were hoping for. In Russia, there's general disappointment about another period of leadership by President Putin and the type of economic policy. And in Brazil, the economy continues to suffer from relatively high inflation and low growth. So this is why we would rank emerging markets at the bottom. But remember, emerging markets are alpha rich and beta poor. What I mean by that is within the right parts of EM, such as the ASEAN region, within small caps, there are big returns to be got. So active managers are actually having a very good time in emerging markets today.
What is the significance of 100 yen versus the US dollar?
Yeah, look, I suspect it's just an easy number to remember rather than being particularly economically significant. The significant event is the weak yen policy plus this aggressive view to try and drive out deflation, target 2% inflation rate in Japan. We just had monetary data published in China. Foreign exchange reserves, if I remember correctly, rose by around 128 billion US dollars. That suggests that the People's Bank of China have been intervening in the currency market to try and moderate the exchange-traded appreciation of the renminbi. I think we're seeing similar stories with the Korean won and the Taiwan dollar. So I do think that we are going to see strains generating as countries in Asia become concerned about their relative competitiveness.